Hello everybody, what's going on? So today we saw a big volatility in the NIO stock, and this was triggered by the news that Singapore's sovereign wealth fund GIC has filed a lawsuit against NIO. This is a big deal because GIC is a major institutional investor. Their disputes center on NIO revenue recognition practices, specifically around its battery as a service or BAS business. GIC allegation essentially echo an old claim from June 2022 short seller report by Grizzly Research. That report alleged that NIO was inflating revenue by recognizing the full battery sales upfront through an unconsolidated affiliate, Myretry. Now, it's critical to remember two things here. First, this is a dispute over accounting methodology, not a claim that the car don't work or the company isn't selling them. Second, NIO conducted an internal review after the 2022 report and concluded the allegations were unfounded. The company's legal department is now handling this GIC filing, which by the way is related to a prior class action suit. So what we are seeing is essentially a resurfacing of old claims. It creates a wall of worry for investors, and that's why the stock dropped. Lawsuits especially involve accounting dispute and sovereign wealth fund are messy, time consuming and create massive uncertainty. This uncertainty is what the market hates most and it forces risk of trades. However, if you're a sophisticated investor, you have to ask, is the core business thesis fundamentally broken? If thesis is legal and historical, you treat it as a litigation risk to be monitored. If the issue were poor sales, product defect, or collapsing demand, that's a fundamental risk. However, right now, I believe that company's fundamental is perfectly fine. When we look at beyond the courtroom, NIO story remains compelling. First, let's talk about the operational scale. Just recently, we saw their cumulative battery swap hit an incredible milestone, proving the robustness and customer adoption of the BAS platform. That ecosystem is NIO's massive competitive advantage. Second, product momentum. They continue to hit strong delivery numbers and their product portfolio is expanding into more competitive segment. Third, Ledao factor. The launch of their mass market brand Ledao is designed to tap into the large segment of the EV market using the existing multi-billion-dollar BAS infrastructure. This move is crucial for long-term profitability and scale. The customer experience, the scale of the infrastructure, and the strategic move into the mass market vehicle are the engine of the business. This lawsuit is a brake applied due to a legal issue. And here's the positive takeaway for the long term investors. When a high growth company faces a significant legal headwind, the market often overreacts. This overreaction can present a classic market dislocation. The risk is real, need to be watched closely. But if NIO is ultimately successful in defending its revenue recognition practices, which they have maintained were sound since 2022, then this serval stock dip offer a chance to buy into a company with a strong strategic advantage in battery swapping, solid delivery growth, and a clear path to scale with the new Ledao brand, all at a discount. In investing, you buy the fundamentals, not the panic headlines. Here, after looking at company's balance sheet, I can clearly say that NIO is doing really good on the paper. Their losses are narrowing and they are reaching towards profitability. Even if this is true, then also I will stay invested in this company because very soon NIO is going to turn profitable and big institutions like GIC are going to jump in after seeing the NIO's profitable balance sheet and we will see some good momentum in its stock price.